Welcome back. Many thanks for staying with us. Indeed, our Dome Praise is just, 3 days away. You certainly want to be a part of it. Well, right now, let's talk about money. What's wrong with the city? It's simple, but a loaded question. Today, we're taking a look at the poor performance of the city. So far this year, it has dropped nearly 7%. It's worse when compared to the 4.1% recorded within the same period last year. It also a poorer result than the 4.7% depreciation recorded in the entire 2017. Bloomberg pegs the year-to-date depreciation at 6.9%. That's your city. So what's accounting for the slump? I have with me an economic analyst from Gold Coast Securities. He's also a GN Research, Emmanuel Zewu. Emmanuel, you're welcome.
Thank you.
It's good to have you, Emmanuel. Well, Norman Hayford from our business desk is also here to help us understand the movement of the city. Norman, it's good to have you as well.
Thank you.
All right, let's kick off this conversation, and I'm going to ask you, Norman, to take us through the performance of the city. Let's begin with what's happening right now as we speak.
Okay, so if you look at the city and its performance today, if you go on Bloomberg, it actually opened at 4 cedis 82 pesos, and previously it closed trading, that was yesterday if you want to look at that, at 4 cedis 80 pesos. That is against $1 that you have. The day range in terms of its performance, you understand that the day hasn't ended yet. But if you look at the performance, it's between 4 cedis 77 pesos and then 4 cedis 85 pesos. But if you want to take a better look at what has happened, you want to look at the whole of the month of August, how the city has performed, and you'll be able to tell what are the reasons that has caused this. Remember that around this time of the year, you have a lot of traders who are looking for dollars to be able to, purchase their goods. These importers want to bring in their goods, and these are some of the reasons that account for the way you see the city perform.
Right.
Because every year, you have the same cycle that happens. At the somewhere March, thereabout, you have companies, especially the multinational ones that we have, having to pay dividends after they have declared their profit. So they have to, take the money back.
Well. So now take us through the month of August,
okay,
and how the city has performed over this month.
Okay, Gifty. So we go on the board, and if you look at Bloomberg right now, you click on the month of August, and that will come up. Let's see the full chart. Let's try and open the full chart. That we'll be able to see how the city is performing quickly. This is 1 month, and then we move quickly. And we'll see. It will come up, and then we'll see how it has performed. But if you look at year to date, we are told, just as you did announce, now, yes, this is the chart. Let me move this way quickly, and then the cameras will be able to, see how the city in the month of August has performed. And you see that this graph goes up, down, up, and as of today, this is where we are, 4.8. That is what we are seeing. And because the day hasn't ended, you actually look at it, and then it gives you, that was yesterday, 4.8, which was how it closed yesterday. And so this is how the graph looks like in terms of the performance of our city against the dollar.
Against the dollar in the month of August. Let me come to you, Emmanuel. I'll return to you, Hayford, shortly. But what does this mean?
Well, let me see.
In the very plain, non-economic, tabletop sense.
Let me say good afternoon to our viewers. Normally, when the city is depreciation, is not new to most of us in the industry. It is the rate at which it depreciates that makes it news.
That's the difference.
That is
really
the difference.
But the depreciation is. But why is it not news that the city is plummeting?
Yes, we've seen it over the years, basically because of the structure of our economy.
Okay.
And as I was saying, it is the rate at which the depreciation is going on. That is why we are concerned. If you have your economy that is heavily dependent on imports, vulnerable to external shocks, you have your currency at any point in time being at risk, especially if you have investments from foreign investors that are basically short-term, and you are relying on this kind of inflows to show up in your city whatever happens on the international market, you should expect it to hit you hard. And that is what we are seeing now.
So what is happening on the international market that's hitting us? Because as far as I am concerned, in my very basic understanding of the economics, the United States economy is doing quite well.
Yeah, so basically it's about investment. Where do I invest my money and get higher returns?
And because the U.S. Economy is doing well, investors tend to look that way.
It's not necessarily about the amount of money you are going to get, but it's also about how sure you are to get that money, the risk associated with the investment. If you look at our economy and other emerging countries, yes, we have a lot of risk associated with what we do as an economy. But if you go to the US market, you are quite sure that the risk is minimal compared to ours. So even if
you choose that.
Yes, even if our rates are so high and a little change in the US rate, yes, somebody will move his or her investment to the US.
So just because of that security. Why we are seeing this. Because if you look at the August trend that he showed us, you see a lot of, you see a very checkered path. It goes up and it comes down, it fluctuates like that.
So when this happens, sometimes it has ripple effects. Maybe just one trigger in a particular month, maybe May or April. And it will take, if you don't respond to it immediately, then you should expect it to run through the months ahead. So yes, the initial changes in the US rate happened in somewhere early May, but our response as an economy and the
will determine how it moves from May.
So it's just a follow through from that trigger we saw in May.
Speaking of this being just a follow through, I'd like to let Norvan take us through this year and how the Cedi has performed over the year, because then it gives us a better understanding and it fits into the explanation that Mr. Zewu here is giving us about how you respond to a particular performance at a given time. Yes, so how you, a particular shock, so how you respond to that will determine how it flows going forward. So Norvan, take us through this year. How has it been like?
It's been very interesting as far as the beginning of this year up to this time. Let's go back to the board, a quick one, and take a look at what you're seeing here. I mean, you see the Cedi and the way it has moved the year from up to today,
so
where we find ourselves. That is 1 year, year to date. No, I mean, this is year to date. So around the same time last year, up to today. This is where we have. So when we say year to date, we're talking of exactly 1 year span. So August last year to August, you know, this year. This is what we see.
So at the beginning, it looks like at the beginning we're low, and then it goes up, and then it comes low again, and then it goes all the way up, and it seems like it's staying there.
Yes.
It's staying there within those few months around that. Explain to us.
I mean, when you see this, just as you're saying, I mean, at a point where people are looking for more dollars, and then they have to change the Cedi into dollar, that's when you begin to have a pressure on the local currency, which is the Cedi. And so you would see how over the period, I mean, at this point, it seemed you could say maybe there was a lot of dollars in the system. Maybe that's where we see what we see.
Which month is that?
This is given us somewhere 23rd of I think October.
Last year.
Last year. And the Cedi was trading at 4 Cedi 37 pesos.
437.
That is what we are seeing. Now let's just stick somewhere here, and you look at 29th of June. The Cedi was trading at 4 Cedis 79 pesos. And this is how you see it.
And that's a huge jump, isn't it?
Exactly. It's a huge jump. But, I mean, of course, you have the government say we're trying to control it. The central bank, sometimes they try to pump in some dollars into the system to ensure that, you know, they can have the Cedi stand afloat, let me put it that way. And that is what happens at some situations.
Okay. So how do we explain that?
If you look at the graph, from January to March this year, you say that the currency has been depreciating. As you said, it's because of the repatriation of the profit, dividend payment, and all those things. But somewhere around March, April, we saw some level of stability in the currency, just because the Christmas effect and the payment of these dividends, and they went down a bit. So you have that level of stability. But from May up to August this year, the trigger has been the development in the international market. And these developments have also hit us in several aspects. If you look at our commodity prices, we are suffering, especially gold and cocoa. We are suffering in those areas. Yes, we see that the prices of oil have been going up. The margin is so small that it can't cover up for the differences between the cocoa prices and the gold prices.
Okay.
So the trend so far has basically been because of what has happened in May.
In May, okay. So in May, so it appears to me that May must have been a very significant, a turning point for us. At that point, that we could have said, what was government supposed to do? I mean,
yeah, as I was saying, it is the extent of the depreciation that matters, okay, to us in this part of the world. Now, yes, when you have the cedi depreciating in May, June, July, August, it's not a problem that much in the past years, because we know the reasons why, and we even expect that this is what will happen. But when it happens that we are not expecting this level of depreciation, that is what we will call on government to do something. For instance, yes, we have some level of seasonality in there, but when you look at the effects that the increase in the treasury bill rates in the US is having on flow of funds out of the country, because investors seeking to gain high returns elsewhere around the world, yes, the depreciation is likely to continue. However, if we don't respond appropriately, as government should have done, then you have a situation where people will come in with their own speculations about how the value of the city will be. Now, this time around the year, those who will be importing or ordering their imports for their festivities will also be waiting to see if there will be changes in the value of the currency. Now, ideally they would have waited to maybe September and maybe October before they start holding the dollar to make these purchases. But because we have seen this depreciation going on, and so far we've not responded appropriately, they will begin to hold the dollar now, so that in case the depreciation continues, they will be covered in a bit. Now, people have also argued that the central bank should have been active enough in the currency market by pumping in some dollars and so to show up the supply. But my argument is that if you have a currency which is also determined largely by your reserves, does it make sense for you to be depleting these reserves in the quest to show up or to curtail the level of depreciation? I mean, it will just be a short-term measure. But where we are now, that is not what we should be looking at. We should be looking at a point where we should be thinking about long-term solutions. How do we bring the currency under control going forward in the medium to long term?
I'll have you tell us a bit of, give us some suggestions that government can do based on your research. I believe you've had some research done already. So, but let's go back to Novan. Novan, take us through 5 years, because that's the sort of database we have from Bloomberg. Take us through what's been happening over that 5 year period.
Okay, so if you take a look at 5 year, this is how the graph looks like. Starting from where I'm standing, you see it from the down below, it started rising, it went up at some point, and then, stabilized at some level, came up again, and then this is where we've gotten to as far as the 5 year period is concerned. And you know what, if you look at it, you could just say that, I mean, where we find ourselves, or the situation we find ourselves today, it didn't start just yesterday. It's been over a period, a long period. That's how come we see how the city has performed. Obviously, the city, I mean, at any point in time, keeps, fluctuating, if you want to put it that way. And this is how come we see the city as it is. But, I mean, in the year 2018, some have also argued that the MTN IPO also contributed to it. After the company had declared its dividend, the Bank of Ghana had to come in and say that, you know what, you need to stagger the payments that you needed to do. And then the IPO as well, they had to agree with them and say, look, you need to stagger it, because if we don't do that and all of a sudden you have to repatriate these funds, that was going to have very dire consequences on the local currency.
In that case, let me come back to you, Mr. Zeo. what are the suggestions available to government in terms of how we respond? Because you've already indicated that the response is very important because it determines what happens going forward.
So the suggestions that I will talk about basically are things that we've spoken over the years,
right?
About industrialization. Yes, if we have in place processes where we can add value to our raw materials, then we should be able to add or gain something in addition what we're currently receiving for these products. Then in addition, look, it baffles my mind sometimes looking at Ghana and Cote d'Ivoire's strength in the cocoa market. Why are we not trying to exploit this advantage? We are still price takers when it comes to the cocoa market. Meanwhile, we control almost 60% of the
But Cote d'Ivoire has a lot of cocoa, more than we do.
So Ghana and Cote d'Ivoire can collaborate, okay, in a way to fix the price on the international market. It's possible. Then, if you look at the figures from Bank of Ghana in terms of export and import, yes, we are reducing the rate at which we are importing, but export revenues are not going at a higher price, a higher rate. So if you look at the trade deficit, the trade balance, it has declined in 2018 by almost $89 million. Where do you get that excess from? Right. So we need to do something to increase our export revenues. We should stop looking at cocoa, gold, and oil all the time. Why are we not trying to boost the non-traditional export industry? For instance, cocoyam, maize. We can try and export all these things outside and to gain more revenues.
Right.
Then tourism. These are sources where you can get sustainable inflows from. You see, so if you have a very buoyant tourism industry, anyone who is coming into Ghana is bringing dollars. Okay, that will show up the supply of the currency.
Okay.
And on the demand side of it, those who want to maybe go to vacation outside the country will look at it and say, okay, there's a very nice tourist site maybe around Techima or somewhere in the country. That person will decide to go and visit that place instead of going into the foreign market, the foreign currency market, right, to demand dollars. So for the tourism industry, it deals with the supply and the demand issue from all angles. So that is why we should be looking at revamping the tourism industry. It's very key when we want to.
So for the market women, for people who sell on the market, for people who are into forest bureaus, you know, small companies, you know, operating forest bureau, etc., why should they be, should they be concerned about this, and what can they do?
We should all be concerned because, as I already said, our economy is import dependent. Now, you have your currency depreciating, automatically it will reflect on the local prices. So you have inflation going up. Why should we be concerned?
Okay.
And it affects those who earn decent income.
Everybody.
It's going to reduce your purchasing power and all those. So everybody should be worried.
Should be worried. Norman, let me come to you and take your very final comment. I don't know if the Bloomberg is able to make projections. You've already told us where we are now in terms of what the Cedi's performance right now, in real time. Are there any projections? Do they make any projections that we can learn from?
Well, of course they do these kind of projections, but some of these you can access it on their terminal when you are subscribed to. But just as Mr. Zeu did indicate to you, all we need to do as a country, one of the main things that we can help in stabilizing this currency is to move from the huge imports that we do and then ensure that we get into some exports and then we begin to do other things. Industrialization is key. Adding value to your product. That is what you have to do.
Very well. Where are we now? Has the figures changed on the chart?
You see that the figures are still around 4.77. We're hoping that by the close of the day, we'll see where it will be.
All right. And Hayford, thank you so much. Novan Aqua Hayford there. He's on the business desk trying to help us follow the performance of the Cedi for 5 years. We looked at today as well. We looked at August. And then we're trying to explain everything, the reasons behind the performance. Let me finally come to you, Mr. Zeu. I just put maybe you'll be a minister someday. So projections into the future. What are we to expect in the coming days?
One of the items that is missing in this discussion is the impact of the banking crisis on the value of the cedi. We are not looking at it from that point. Yes, even though it's also part of the reasons why we are seeing this level of depreciation. Now, so far as the banking crisis is not over yet, then we should expect the cedi to continue to depreciate. For instance, anyone who is coming to invest in Ghana, whether it's bringing in dollars, euros, or pounds, ideally will have to pass his or her money through the banking system.
Right.
Now you have the banking system having challenges. That person will also be thinking about the safety of the money.
Of my money.
So you'll be a bit reluctant to bring in the
So
foreign.
you say that this banking crisis has really affected the sector.
It's part of the reasons why
and may have implications for the economy going forward.
Yes. And given that the deadline for the banks, to meet the minimum capital requirement is at the end of this year, we should expect some level of depreciation going
these
forward.
things. Wow.
Yes.
Wow, that doesn't sound so good. That doesn't sound so good. But let's wrap up this conversation with us looking at, I'm just presenting to you, I understand the Nigerian performance. It appears that it looks quite, I believe that's it. That's the Nigerian performance. So there you can have a look at it. That's the Nigerian performance, how Nigeria's currency and the Naira has been performing. Does this look better than Ghana's?
Well, for the Nigerian
for month of
case,
August, yeah.
Yes, I don't want us to dwell so much on the Nigerian case, because if you look at Nigeria, they use the yen, more in trading. So
because they trade more with the Japanese
and the Chinese, Chinese yuan too. So if you are going to be comparing the performance of the Naira against the dollar, and compare that to it will not be doing a proper comparison.
Okay, but it looks quite stable. I mean, if you look at it, it looks quite stable.
Cedi is having crisis in terms of the dollar. Nigerians are also suffering when it comes to the Chinese yuan. Because China is their biggest trading partner. So last week or so, I think the Central Bank of Nigeria has to pump in some Chinese yuan to show up the Naira. So if we are going to do that comparison, if you look at the year, the performance of the Naira against the US dollar has been fairly stable compared to what we are experiencing in Ghana. So I think doing that comparison will not be fair if we are going to go that way.
Mr. Zeo, thank you so much for coming. Emmanuel Zeo is an economic analyst. He's with GN Research. You're still watching The Pulse with me, Gifty and Dwapia.